You are listening to chartingwealth.com for Wednesday, the 4th of May, 2016. We always start with IYY. What is that? Well, that is the iShares Dow Jones U.S. Total Market Index Fund. It represents the entire stock market. We also always start with our two-day chart. Each of the candles represented on our chart stands for a two-day time period. Those of you listening by audio, I will explain to you what we are going over. We can see that the market rolled over, topped out. Well, it actually hit its peak back on the 20th of April. It then slid sideways for about 6 days and started rolling over hard back on the 2nd of May, followed by the first half of the two-day candle that started forming up on the 3rd of May. What do we see going on? Well, strong down movement, a huge down candle on the 2nd, well, a huge down wick on the 2nd, followed by a bigger down candle on the 3rd. Only half of that candle's been drawn because on the 4th, the remainder of it will close that candle out. We have a crossover on the two-day chart going down back on the 28th. The derivative oscillator crossed over, actually switched from green to red on the 3rd of May. Now, what do we see going on? Well, before we go to the half-day chart, the 4-hour chart, the market was down for the day on Tuesday the 3rd, 0.92% total market. Now, what happened throughout the course of the day? Lots of down movement in the morning, followed by down movement in the afternoon. Derivative oscillator very much in the negative. Market originally started going down on the short 4-hour chart back on the 22nd of April. Then it slid sideways for a while and really started trudging down back on the 29th. And then, of course, this latest move down on the 3rd of May. So we see that the market is a confirmed down move. Don't have an entry point yet for this down movement because we haven't had a crossover that is a reverse in the down move on the short chart. It's the short chart that teaches us when to get into the move. Now, the short chart didn't allow us to get in because it crossed over going down, and it was enough down momentum starting on the 22nd when it crossed over to finally drag the big chart over and going down back on the 28th. So we've had no ability for a rollback to occur yet on the short chart, so we might find an entry point. We're looking for that. Tune in every day. We'll help you try to find it so you can jump into a virtual trade. Now let's go from the IYY to the SPY. What is that? Well, that's the SPDR's S&P 500 Trust Series Exchange Traded Fund. It looks somewhat similar because, of course, the S&P 500 represents 500 big companies, a lot of the volume of the market. It is a little bit different. It crossed over on the derivative oscillator back on the 2nd. The total market, that happened on the 3rd. We have lots of down candles, strong down movement, particularly over the last two-day candles on the 2nd and the 3rd. If we look intraday, what do we see? We see that the market was down substantially in the morning, up a little bit in the afternoon, still below the two-day trend line. Again, waiting for a rollback to see if there's any possibility to jump into this down move. You might say, wait a minute, what are you guys talking about at Charting Wealth? Why would anybody want to buy into a down move? Well, you can buy something called SH. What is that? That actually is an exchange-traded fund that moves in the opposite direction it's a short of the S&P 500. When we plug that into our chart, lo and behold, it appears to be going up. And it does go up in a reverse pattern from the S&P 500. It is the ProShares Short S&P 500 ETF. It gains value as the S&P 500 goes down. Now, isn't that interesting? What does that offer you the ability to do? Make money when the market goes down. That's why we want to learn to read the charts. We don't want to just figure out when the market's going up. When we can figure out when it's going down, you can make money in a down move. Isn't that genius? Again, the market is a wonderful place if you understand how it works. Now, we're going to go back to our charts. We're going to get away from this short chart and we're going to go to the Qs. Now, again, the Qs has an inverse called QID. Several of them. QID is a double inverse on the Qs. So as the Qs goes down, as we're seeing strong down movement, 5 two-day down candles, crossover actually a couple of days before the NASDAQ 100 crossed over. That is what the Qs is. A couple of days before, actually it looks like about 4 days before, we saw the down move in the total market in the S&P 500. Got a nice 2-day trend line connecting 3 candles. If we look at the 4-hour chart, what do we see? We see the NASDAQ 100 actually sliding sideways. Maybe we'll have a crossover going up and can actually find an entry point to jump into this down trade. So again, continue to pay attention. And again, the Qs, just like we see with the S&P 500, has inverse funds, inverse ETFs that you can jump into when the market's going down. So again, good reasons to be able to read the charts. You can make money in any market potentially. Now lastly, we're going to go back to our 2-day chart and we're going to look at gold. The Qs, for the record, down 0.93%. Gold was down 0.23% for the day on Tuesday the 3rd. Gold is showing us 3 big up candles. In fact, the up candle on the 2nd was huge. The up candle on the 3rd, not quite as big. You might be saying, wait a minute, I thought that the market was down on the 3rd. It was. The candles that we use, the Heikin Ashi, it means average pace in Japanese, Heiken dash S-H-I, A-S-H-I, Heikin Ashi. Read about those. Go to our website, Charting Wealth. We have some teachings on those. You can also find information at Investopedia. We like them because they help show us trends and movement in price. What we see is the 4-hour chart in gold, the 2-day chart in gold crossed over, going up back on the 2nd. Derivative oscillator switched over at about the same time, always a good sign. We have drawn a 2-day trend line, a rather steep one. We're still way outside the Bollinger Bands on our candlesticks. If we look at the 4-hour chart, what do we see? We see that gold could be topping off in the short term. Maybe it'll roll over and go into a down move on the 4-hour chart. And we would, of course, wait for a crossover going up in order to jump in at that point potentially. Again, we'll help you make those calls for your virtual trades. We're not a stock calling service. We're an education firm. That's why we want you to open an account. Get yourself a virtual account opened and you can practice with us every day. That's why we ask you to join us. That's why we do this broadcast every day, plus our weekly review and forecast. Go to chartingwealth.com, sign up for our daily newsletter. You will get just what we've gone over today. We cover every day the total market. The S&P 500 is represented by SPY. Total market represented by IYY. The NASDAQ 100 represented by QQQ. And gold represented by GLD. We appreciate you being with us. If you appreciate what we do, go to iTunes. Give us a 5-star rating. Sign up if you want to and subscribe to our podcast. Say nice things about us. Follow us on YouTube, Instagram. You name it, we're there. Facebook, Twitter, we're on all of them. We would love to hear from you. Go to Charting Wealth. Let us hear from you and be with us every day to master the marketplace. And remember, pay attention to the charts and not the media noise. Thanks so much from Charting.